Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader at XAUUSD. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is the 4-hour chart of gold USD in front of us. Yesterday, when I opened the chart, I was shocked to see gold in the same old level or Purana level of 1780, 1790, and right now we can see that gold closed at 1810. The last traded price of gold is 1810 here. So now let's find out the important levels for gold for Monday. You can see that I have drawn many lines here on the chart, especially these three lines here and a one big red arrow. First of all, let's try to find out the important support levels for gold. If you have been trading on the chart of gold for last few months, then you would know it very well that the support level of 1790 was very important. Then it shifted to 1785, 1780. So right now 1785 is an important level or important support for gold. So if gold comes down to 1785 level again, you can expect some sort of bounce, and with proper risk management you can expect a buy position here. Here you can take a buy position. If gold comes down to this level and bounces on Monday, you can take a buy position. But in case the selling pressure is too high, because if we look at the overall chart of gold here, we can see that overall the trend of gold is towards the downside, which clearly signifies that the selling pressure is still there on the market. We cannot consider this as a bullish chart. The trend of the market is towards the downside. So as a result, there may be some strong selling pressure as well. So in case on Monday, if we find gold breaking the level of 1785 and going below, okay, in that case, do not take any buy position. Okay, you do not take any buy position. Your next important buy level will be around 1760 to 1754. This is an important support from on the chart of gold from the higher time frame. You can see that we have an important support around 1785, 1780 level. If gold comes down to this level, you can expect a bounce. In case it fails, leave it. Don't do anything. But if you want to take a sell position below 1780 level, if you want to take a sell position below 1780 level, then also you can do that. But keep in mind that you need to exit by 1760 if you take a sell position. Okay. So your next buying can be around 1765. Sorry, 1760 and 1754. This is a support zone on the chart of gold, and you can find out the support zone on the chart of gold on the higher time frame. Let me show you. See, this is a weekly chart of gold here. You can see this is the support right now. Okay, in case this support fails, then we can expect gold to take support around these levels. Okay, so 1780, 85 is the first support for gold, but as gold has been testing the level for the last couple of days, so there is a possibility of market breaking the support as well. So if you want to take a buy position, wait for the market to bounce. If you see market bouncing from 1780, 85 level, then only go for a buy level. In case market breaks it, you can go for a sell, and you can exit from your sell position by 1760, 62 level. We can expect the market to bounce from 1760, 1754 level, as we can see that on the higher time frame we have support, or there are some big players present in these levels. But my dear friends, do not forget that if we look at the overall trend of gold here on the 4-hour chart, we can see that the trend of the market is not much bullish. We can see the presence of sellers on this chart very well. So as a result, you must be flexible enough, and you should look for selling opportunities as well in case market goes up. Now let's try to understand the selling opportunities on the chart of gold, or the so-called resistances. Okay, the most important or the strongest resistance on the chart of gold is around 1880, but this level is too far away. Okay, 700 pips is too much. So this is the strongest resistance, but this is far away. So as of now, we should be focusing on levels like 1832 and around 1820-24 level. Let me explain why. Okay, or why these levels are resistances for us. First of all, if we look at the chart of gold here, or simply focus on this particular portion of the chart here, we can see that we can draw a trend line. We can draw a trend line, and the trend line is acting as a dynamic resistance. It is acting as dynamic resistance. So if market goes up from here, we can expect the market to respect the trend line as still a resistance, and we may see some reversal as well. You're getting the point? If market goes up, then we can expect the trend line to act as the same resistance, and we can go for a sell position because the trend line is acting as a dynamic resistance. And apart from the trend line, if we take help of the Fibonacci retracement level, then we can see that around this level only, okay, around this level, see, around 1820, around 1824 level, we also have the Fibonacci 38.2% retracement level. And if we look at the overall chart here, then we can see that previously also Fibonacci has been acting as a resistance for the market. Okay, so there is no doubt that Fibonacci is working on this chart. So therefore Fibonacci 38.2% retracement level plus the trend line may act as a good resistance for the market, and we can expect the market to reverse from here. If market reverses, or if we see price rejection around these levels of 1820 to 1825, then we can definitely take a sell position because of Fibonacci 38.2% retracement plus the trend line. But my dear friends, keep in mind, confirmation is always important. You should not trade blindly. After all, it's your hard-earned money. Okay, so do not trade blindly. Once you see the market is reversing from the seller zone, then only take a sell position. Keep in mind, no level is permanent in the market, and in case the buyers dominate the market on Monday, if you find market breaking these levels of 1820 and 1825 on Monday as well, then in that case the next resistance can be around 1830 to 35 level. This level 1830 to 1835 level. Why? Because this is the Fibonacci 50% retracement level. So these are the two important retracement level for Monday. As of now, I think that if the same pattern continues on Monday, then we can expect the market to reverse from 1830 to 35 or the Fibonacci 38.2% retracement level. Okay. So these are the important supports and these are the important resistance for Monday. And my dear friends, if we look at the chart of DXY, then as we all know that DXY looks unstoppable. DXY standing at 105.12. My God. Okay. So if you look at the chart of DXY, okay, listen to me carefully. Then though you can see that we have a resistance around this level. Yes, though we have a resistance around this level, but it looks like an ascending triangle pattern. Okay, it looks like a typical or classic example of an ascending triangle pattern. An ascending triangle pattern is a bullish pattern, so there is a possibility that DXY may break this resistance and may go higher. If DXY starts flying again, then obviously we will see pressure on the chart of gold. Keep in mind, fundamentally and technically, DXY is extremely strong and things are pointing towards an upside only. So my dear friends, be careful and strictly follow risk management. Bye bye, take care.